Okay, is bar 3 similar situation to the bar at 315? Trading range at the bottom of the bigger trading range, but bar 3 had 3 bull bars before 315. Didn't get so much more buying pressure before bar 3. What are your thoughts on it? Well, so bar 3 at 315, I assume you mean 315 Eastern time, which would be right here, 415 Central time. Comparing this at 315 your time to here, it's still similar. You have right here your low in a trading range. I'll zoom out a little bit. 3 bars up, probably buyers below for at least a test up to here. Bottom of trading range here, arguably 2 legs up. You can say 1, 2, 1, 2. Point is, strong enough leg up to for probably buyers below. However, you have a gap right here, possible double bottom here. We're getting tops up here. So where I'm getting at is, since this is a double bottom, you can argue a high 2 buy with here at 11:45 Central Time, 1 o'clock Central Time. So double bottom, breakout below, usually forms a wedge. We're right back in 50% of this move, which I'm assuming is around close to it, depending on how you draw it. So right here, high, you can call it a high 1 or a high 3. The point is, you have had 3 bars down, make it a second leg down, but right in the middle of this area. So 2 o'clock Central Time, right here, you have I'd call it just a low 1. The point is, it's a terrible stop entry below because it's forcing you to sell low in what's likely a trading range. And by low, I mean this area. So probably buyers below at least for a scalp. You can see they bought. If you bought the low with 26 even, it price pulled back to 25 even. So a lot of people either tried to buy 1 point lower or scale in. And as you can see, whenever you have a low 1 and price only goes 4 ticks lower, 4 ticks in the ES, and doesn't go 5 ticks, that means a lot of people tried to buy exactly a point lower or just buy a point lower. So it increases the chances that price will go up. Here, 1410, 1405 and 1410, strong enough 2 bars up that bears, this is likely due to bears selling this 50%. So here, you could say here, depending on how you draw the 50%, you do that. You do that. Point is, 50%, bears will short right around here. If they're lucky, they'll get in with only a tick against them, scalp out for a point. So if you sold exactly at 8 even, the low went to 625, meaning you could have gotten a scalp. Your entry be 8 even, target 7 even, price went 1 tick lower. So here at 1415, what you're asking about, trying to sell either 1420s, trying to sell in a stop down here is selling where the bears are buying back shorts. So if you think about the math, bears wanted a second leg down. However, here, strong enough reversal up to make it more sideways. Bears scalped out. You can see here, did not trigger. So kind of a double bottom. Another thing important to notice is if you bought this close, what do? Let's say You bought the close at 26.25. Let's say you tried to buy 27.25. If you scaled in 1 point lower, or 1 point higher, excuse me, you would not have been able to get out. If you tried to sell 2 points higher, if you were lucky, you would have gotten filled. So let's say you did. Let's say you sold this close, sold 2 points higher, and you got lucky and filled. Price went your break-even point, so break-even on the entire trade minus commission, was 27.25. Price went exactly to 27 even and turned up. So that means a lot of people tried to get out. So they sold this close, scaled in, realized they were in trouble here, tried to get out exactly at break even. Some were lucky, others were not. So once this turned down and started going up, bears realized they were in trouble. However, still top of the trading range. So second, arguably 2 legs up, second leg being stronger than the first. Here, you can argue a high one buy. However, it's a terrible stop entry at the top of a trading range. So if you think about the math, you have a probably high risk. You really need to stop somewhere down here. Low reward, not great probability. So you should do the opposite. So probably sellers above, sellers up here, sellers at the close for at least a test down. And I have a few more minutes. I'll probably have to make another video on this, but failed trading range breakout and your analytical process. Yeah, one thing about that is 80% of breakouts fail, which I know you've heard, and you almost have to do the opposite. So down here, once you have this and this, you have to be thinking, we've been going down for at least 10 to 15 bars, start looking to buy. You can see here, every new low, we found buyers. So if you bought this low, you could have scalped out and made a profit. If you bought this low here, could have made a profit. If you bought this low, could have made a profit. So bulls are buying lows, which means bears are less willing, to sell below bars, and they're probably wanting to sell more limit orders. So here we've been going up for about 10 bars at the top of trading range. You can call it a high one, a high two, doesn't really matter. Point is, great looking signal bar, terrible context, probably sellers above. Even if you put a stop here, you've got to at a minimum get all the way up here. So that means you've got to break above this lower high, and that's just 60%. You're at the top of the trading range, so you really, the odds are not 60%, and they're not as great. However, here, as I mentioned, I believe before, we went one tick above this. Right now we're in a bear, you can call it a bear channel, kind of zoom out. You can make the case, lower highs, lower lows. However, when we went one tick above and turned down, it increased the chances of more trading range. So if you notice here, 8:30, you had a stop entry buy. You can call it a high two. You can call this a high two, double bottom. Here's a high two. You can call it a breakout pullback. Doesn't matter. What matters is we went up, pulled back, and stopped out weak bulls who put their stop at break even. We did that, formed a low one, but at the bottom of a trading range and at support, the entry price for the bulls here, low in the trading range. So probably buyers below in a bad signal bar. And, well, I hope that answers your question. Let me know if there's anything else. Thank you.